Hello everybody, what's going on? So today we are tackling the massive question surrounding NIO stock. Why is this quality EV leader seemingly stuck in the mud as the calendar year winds down? The charts look ugly, but I'm here to tell you that this dip has everything to do with the market mechanism and nothing to do with the company's long-term potential. If you are watching NIO fall, you might think the sky is falling for the Chinese EV sector. But let's not look under the hood. What we are witnessing is a classic year-end phenomena, tax loss harvesting. Big investors who have made huge gains this year, maybe on tech gains or pharmaceutical stocks, look for losing position in their portfolio like NIO and sell them off before December 31st. This generates a paper loss that can be used to offset their capital gains, effectively lowering their tax bills. It's a smart tax move, but it's resulting a wave of selling pressure that is non-fundamental and completely artificial. It's a strategy to save on taxes, not a vote against the business. This tax strategy creates a crucial setup for the new year. When an investor sells a stock for tax loss, they cannot buy that stock back for 30 days. That the worst sales rules. This rule act like a giant stopper, keeping a significant amount of money and demand out of the stock like NIO for the entire month of December. This means that the stock price is artificially depressed because the very people who sold it and will likely want to repurchase it are legally forced to stay on the sidelines. The selling isn't being met with its neutral demand. The moment that 30-day restriction lift in the first couple of weeks of January, that trapped capital is unleashed. This creates a mechanical rebound as those buyers rush back into the stock they just sold. The fundamental didn't change, but the technical selling pressure vanishes and new massive buying wave begins. This historical pattern is why January often sees outsized gains for stock that experience heavy tax loss selling in December. And speaking of fundamentals, let's not lose sight of the true story here. Deliveries. NIO is constantly pushing boundaries and expanding its market share. Second, innovation. Their unique battery swap network is an innovative moat that competitors simply cannot replicate easily. Third, expansion. They are solidifying their position in China while strategically looking at global market. This stock is growing, innovating and building a powerful brand. Don't let a temporary candle-driven dip scare you. The December volatility is simply setting up a powerful rebound. For those with a long-term view, this is not a time for panic. It's a time to recognize the value being offered. I believe NIO is poised for a very strong recovery as we head into the new quarter. So get ready for it. With that said, thank you so much for being here. See you in next one.